Hello, and welcome back to the Macro Gamer channel. My name is Mark Cassingham, and today we're going into our weekly numbers for week number 28 as of today, February 1st, 2025, which is Saturday. So we're going to go into our normal process and normal procedure of it all. Go through this one by one. So first, we have our portfolio's net worth, currently at $394.83. And again, that is as of today, February 1st, 2025. We have our portfolio weekly data for week 28. This is from January 27th to February 1st. We have a net cash flow of $29.96. So it's basically that $30 deposit that we have every 3 weeks. So you see this large spike up on the chart from that. So every week, $10 gets deposited. And once the cash pile gets above $25, then it gets deposited into the portfolio. And it buys up the individual allocations of the portfolio. So currently for that 1 week, we have a money weighted return of 0.25%. We have a market gain of $3.38, and we have no dividend earned for this week. So that is the weekly data for week 28, from January 27th to February 1st. Next, we have our portfolio monthly data for week 28, which is from January 2nd to February 1st. We have net cash flow of $63.16. So you see these two large spike ups on the chart. One on January 8th and one on January 29th, which is earlier this week. So that's $60 coming into the account. That's cash. Then get deposited into the portfolio. And always the little extra $3.16 is usually from dividends or extra cash. We have a money-weighted rate of return of 3.43%. We have a market gain of $10.38, which is kind of a lot in a month. And we have our dividend earned of $0. So this is our monthly data for week 28 from January 2nd to February 1st. We have our portfolio quarterly data for week 28. This is from November 1st, 2024 to February 1st, 2025. We have net cash flow of $153.62. So you see 5 deposits, $30 deposits. You see 1, 2, 3, 4, 5. So every 3 weeks over that 3-month period, you had 5 deposits equaling $150, and then the extra $362 is from dividends cash. You have a money weighted rate of return 4.48%. You have a market gain of $14.11 during that time period, and you have a dividend earned of 25 cents. So quarterly data for week 28 from November 1st, 2024 to February 1st, 2025. And then the next chart is we do our all-time data. So this is from day 1 till today. So day 1 going back to July 21st to 2024 to February 1st, 2025, we have a net cash flow of $374.33. So remember, the first initial deposit was $100. That's to open the account. That's just the initial seed money. And after that, every 3rd week is a $30 deposit. So you have 1, 2, 3, 4, 5, 6, 7, 8, 9. So 9 times 30 for $30 each time, you get $270. Our initial $100 deposit, add that in, makes it $370. And we have this extra $4.33 from extra cash from dividends. We have a money weighted rate of return of 9.86% over that time period. We have a market gain of $20.50 and dividend earned of $1.28. So this is all time data from day 1 till today. So you see from the very beginning till today where we're at. We have our portfolio weekly percentages for week 28. We have our target weightings as always. So there was a change. You're going to see that. We have our gold position at 30% with our GLD ETF. We have our dollar position at 20% with our UUP ETF. And recently we added we increased our commodities position to 20%. It used to be 15%. Now it's 20% when we use our USCI ETF, and we're going to see how that goes with tariffs and trading and all that. We'll see. It's going to be interesting. We have our equities position at 15% with our RSP ETF. We have our government bonds position at 10% with our GOVT ETF. And we have our Bitcoin position at 5% with our IBIT ETF. Pardon me. Yeah, doing this in the morning is always like the worst time. The sooner the better for me. So our weekly percentages for week 28. Our gold position is up 1.18% for a market gain of $1.36. Our US dollar position is up 1.04% for a market gain of 79 cents. Our commodities position is down 0.52% for a market loss of 39 cents. Our equities position is down 0.56% for a market loss of 32 cents. Our government bonds position is up 0.50% for a market gain of 20 cents. And our Bitcoin position is down 3.44% for a market loss of 68 cents. So this is weekly data. So from the January 27th to February 1st is basically that time frame. Now we have our monthly data for week 28, which will be from January 1st to February 1st, essentially. So we have gold position up 6.78% for a market gain of $7.08. That's a big move for gold in 1 month. It's a big move. So there's a drop. We'll see that on the charts. And then it was a turnaround and it came back up. So I didn't decrease my position of gold because I wasn't convinced that inflation and everything's going away. And so far there has been this turnaround here. So that's a good sign. We have our US dollar position up 0.30% for a market gain of 21 cents. We have our commodities position up 4.15% for a market gain of $2.34. This came down a little bit because it broke out of our trend and it came down. We'll see that on the charts. Our equities position, our stocks, up 3.44% for a market gain of $1.81. Our government bond position down 1.67% for a market loss of 84 cents. And our Bitcoin position up 8.45% for a market gain of $1.43. So this is week 28 from January 1st to February 1st. Now we have our quarterly percentages for week 28. So this will be from November 1st to February 1st. Pardon me. We have gold position up 3.89% for a market gain of $3.68. We have our US dollar position down 0.12% for a market loss of 7 cents. We have our commodities up 8.94% for a market gain of $4.12. We have our stocks, our equities position up 2.11% for a market gain of 0.96 cents or 96 cents. We have our government bonds position down 0.61% for a market loss of 29 cents. And we have our Bitcoin position up 45.48% for a market gain of $5.23. So that's our quarterly data for week 28 from November 1st to January 1st. And now, again, we added our all-time percentages. So just remember there's going to be distortion in these targets versus what these percentages are because I've moved percentages up and down over this time period. And you'll see that, I believe, in the next slide. So we have our gold position, all-time position up 15.70% for a market gain of $10.18. We have our US dollar position up 1.11% for a market gain of 46 cents. It's almost like it barely moved. We have our commodity, I don't know why I'm laughing. We have commodities position up 13.92% for a market gain of $4.45. We have our stocks position up 3.80% for a market gain of $1.15. We have our government bonds position down 2.05% for a market loss of 90 cents. We have our Bitcoin position up 75.87% for market gain of $7. There we go. So this is all time. So this is July 21st, 2024 to today. All time, the whole shebang. Right? But just remember these percentages have changed over that time period. So it's not equally represented here. It's just to kind of show you, all time what these numbers have done in a sense. So now speaking of that, position changes. So since July 31st, which was our first position change, which was decreasing our USCI, which is our commodities ETF by 5%, and increasing our government bond position with our GOVT ETF plus 5%. And we have each time our position changed. And then most recently this week on Monday, January 27th, 2025, I decreased the government bond position by 5%, and I took that 5% and then I put it into commodities and I increased it by 5%. Now, I'm thinking long term. When I say long term, I mean like several more months probably, that inflation's not really going away. I don't know how tariffs are going to affect things. Might actually make bonds go up because people are concerned with tariffs. I don't know. We're going to see. But at the very least, the government can't fight inflation, at least the way they think they can. So I don't think it's going away. Gold's been going up. Commodities have been going up. Commodities broke out of their trend and went up a lot. I still think that trend's going to continue. There's going to be choppiness, of course, but I still think it's going to continue. So government bonds used to be at 15%. Now they're at 10%. And commodities position used to be at 15%. Now it's at 20%. So gold at 30%, as you saw. US dollar 20%. Commodities at 20%. So that's 70% of the portfolio right there in those three positions. We have some transactions for week 28. So this transaction on the left side here of the screen was on January 27, 2025. So that was that change where I sold some of my position, primarily the government bonds down here. You saw I sold for $17.61. And you see these other three positions, which just sold off a little bit. 98 cents for stocks, $1.13 for gold, 67 cents for Bitcoin, just a little bit. And we bought into commodities for $17.63, and they bought US dollar for $2.68. So primarily those selling of bonds and buying commodities. That was the main point of this. On the right side is our typical every 3 weeks we just deposit cash into the portfolio and we buy our assets. So we put $30 on July 29th into the portfolio. We bought $5.53 of US dollars. We bought $8.89 of gold. We bought $3.09 of bonds. Bought $4.80 of stocks. Bought $6.41 of commodities, and $1.32 of Bitcoin. Right? So these are our transactions. So 2 sets of transactions that happened this week. We have our Illuvium staking dashboard for week 28. Again, this ILV balance, I don't know why it comes out fucked up like this, but we have 7.14 ILV staked for revenue distribution, which has a current market value of $211.57. The current price as of filming this is about $29.64. So right around that $30 mark. So it's been coming down. A lot of the altcoins have been coming down. We have our previous revenue distribution claims. We've had 3 so far, which has equaled 0.024 ILV, which has a current market value of 71 cents. So this is and remember they changed the dashboard. They made an update to the UI and everything. So it looks a little different. I guess it looks a little more streamlined, you could say. I don't think it looked too much different or better or worse really than the previous one. We have our Illuvium investing schedule. So see in the title, put Illuvium investing in the parentheses 1 because I have this. I'm just gonna have this as 2 pages because they segment it on the site as multiple pages instead of just like a long list, which I thought would have been better, but whatever. So I'm gonna have 2 pages now for this, and you'll see. But anyway, so we have our first 6 here, going back to our very first stake on July 27th, 2024. Which will unlock in 176 days. And then you see every month after that, I've deposited another $30. So on August 24th, on September 25th, on October 25th, on November 25th, on December 23rd, and then on page 2, you see now there's a 2 here, Love Investing. This is the most recent one on January 25th. So now that it's February 1st, you know, around say the 25th or so, I'll do another one. This will have 2 on this page. But I bought 1.22 ILV worth because it was like around $30 ish at the time. Like I said, this is why dollar cost averaging is good, because you look at the previous ones, you know, the same $30 gets you, or $40, I apologize, $40 gets you different amounts, you know, based on the fluctuation of the price. So I got 0.79 back in August 24. I got a full one back in September. I got more than a full one in October, but then the price went back up. And then in November, I only got 0.74. December, I only got 0.95. But now we're back up because we're below that $40, that price point where I buy at. So I got 1.22. So dollar cost averaging, you know, fluctuates. Pardon me. So here's our revenue distribution. So we have currently $0 to claim, so nothing, or 0 ILV to claim, so nothing to be claimed. And as I said, we have 0.024 ILV, which have a market value of 0.77 cents as our current revenue distribution, and we have no Illuvium transactions this week. And those are our numbers. So now we will get to our charts. So we have our gold chart, which we always love to start with because that has been our longest held asset. So this is what I said, coming in here from December to January, this little drop that happened below the trend line, and then it came back up into the trend line. So now we're back in this green trend line, and this goes back to October of 23. Make it look like that. There you go. So it came down before. I say this every time. It came down in February of 2024. It came back up in March 2024 and continued in this trend, and then it dropped in December 24 and came back up in January 2025. So we're still in this uptrend. Gold is still doing great. Last year, gold did outperform the S&P 500 by like a couple percent. Not a big deal, but a couple percent. So gold was a great play. I should have been more into stocks last year because my portfolio would have looked a lot better, but I was just not optimistic on the market. I should have just stuck with the charts, and I have this problem, you know, like I'm sure like most people do too. Like when you look at something, you think it should be, but the market just does what it does, and you know, you try to act like you're predicting the market, but you can't. But anyway, at the very least, I owned gold all that time, and you saw every week 30% gold, 30% gold, 30% gold. My highest allocation to any asset is going to be roughly 30%. The absolute maximum I might put is 35%, but I've yet to do that. I'd prefer the maximum to be 30% because I have to be diversified across all 6 of these ETFs. I can't have like 95% in one ETF and then 1% in these other ones or something like that. Like that's far too concentrated. I got to be diversified. So 30% gold, best position, back up in this trend. I like seeing that. I don't think inflation's going away, at least not yet. So gold's going to keep doing good. US dollar. So we have our US dollar ETF. Slightly been coming down. Remember this sell-off that was right here was for the dividend EX date. So people bought into the ETF, claimed the dividend, and sold out of it. If we go to our DXY ETF, you see this is a better representation of the US dollar. It still came down on the sell-off, and then a slight turnaround that's happening right here. So sell-off and then turn around. We go back into our portfolio, look at our dollar. So the sell-off and then turn around right here. So still have it at 20%. Maybe I could do this. Maybe does this look better? Let's see. Maybe something like that. And I'm gonna leave this here for now. When I try to redo these lines, you know, I'm just trying to see like what's the trend gonna be? What's the trend gonna be? You know, this sell-off wouldn't look exactly like this though, because this is the other EX date in the previous year of 2023. So it wouldn't look the same, but we'll see, because this trend would look probably more like, let's see, probably look more like that if anything, because if it didn't sell off, it'd be going like this, you know. So we'll just keep it like that, because this drop wouldn't have happened. It would have came down right here. It would have been like that. So we're gonna keep like that and pretend like we know what we're doing. All right, well, that's our US dollar. Still holding at 20%. It's choppy right now. It's inconvenient. Like I said, these tariffs coming up. I don't even know. It's supposed to happen, I think, today. I think it was February 1st. Yeah, I think it was today. But we're going to see really what happens in the market on Monday. But I don't know. You know, we're going to see what happens. But I'm still at 20% in the US dollar. US dollar is always good in uncertain times. All right, we have our commodities ETF. This goes back to July 2022, right? July 2022. Just in this fucking uptrend, doing absolutely great, and then broke out of the uptrend. That's surprising. I did not expect that to happen. But we increased it, of course, by 5%. Of course, that's when it tops and starts coming down. Obviously, we always pick the worst time to go in, increase our investment. But like I said, in the long term, I believe, I'll put that in quotes, I believe that inflation is not going away, and this uptrend will continue until the inflation starts coming down, and then commodities will likely come down with it. So I'm watching this. We're now 20% in USCI ETF. 20%. It used to be 15. Now it's 20%. We increased it. So I still think it's probably going to come down. Probably come back to this trend. But this overall trend, I think, is going to stay. I think it's going to still bounce around up in it. So we're at 20%. That is our current allocation to commodities. So we have our stock ETF, RSP, sorry. Going back to October 23, it's been in this uptrend. I had a couple breakouts of this trend, and then it really dropped here in November going into December, and then hit this bounce kind of in mid-January and started to come back up. So I haven't took off this trend yet. I don't necessarily think that this is going to get back up into this trend. I think there may be a deviation in the trend. It won't be like this sharp uptrend. It might be coming at an angle, a little more of an angle. Maybe I'll just put this up. I did this last week. Maybe I should just keep it up just to kind of give people perspective. Let's say something like that. So even though it popped out a little bit here, it's fine because it came down and came back in this trend. I don't know if you can go back. Oops. Nope, don't do that. Go back. Here we go. There's nothing there though. It's fine though. Just open this here. Yeah, actually I don't like that. We'll keep it back. Kind of see what it looks like it started. So we'll say this trend is happening right here. We don't know for sure, but this might be the next trend. I don't like the extra crossing of the trends really, but that's kind of where we're at. I could probably just do this to appease myself. If I can even fucking reach this thing. It's way up there, Jesus. There we go. So we'll make it look something like this. There you go. So there's a deviation in the trend. So it was going up like this and then started going like this. So that's kind of like how we're going to make it look now. I have decided. So this trend's going to continue like this. No, I'm just kidding. I don't know what's going to happen. But at the very least, this is kind of the trend we're looking at. This goes back to April 2024. So it's kind of going, popped out, then a strong drop back. So we don't know what's going to happen with stocks. If we look at the S&P, it's been going pretty good. It's higher up on this trend for sure. It's going back to November of 2022. It dropped down here, but it came back up and it stayed in this trend. But it's still kind of peaking up at this high part of the trend, so I don't know if it's going to drop again. We'll see what happens. But I'm still keeping it at 15% because that's, I had it at 10% for so long and I missed a lot of this run. I didn't miss it, but I could have had a better return for sure if I increased more stocks. But now it's getting more choppy, and definitely this sell-off right here is an indication of that. But right now we still have it at 15%, and this is kind of like our new trend, I guess we'll say that's happening. Government bonds starting to have a bit of a return. I don't know if it's going to get back up above this green line. I show this every week. This goes back to the COVID pandemic back in March 2020, and it's just come down. Right? Probably going to extend this even further if I really wanted to. Like that. So this has been bonds basically since the beginning of the COVID pandemic, just selling off while bond rates have been going up. I thought that maybe this is like a bottoming kind of right here, but I don't know because it's still coming down. I don't know if this is the absolute bottom here in October 2023, but we can see if we can reclaim this in bonds. Maybe if tariffs do pop off, maybe bonds will fucking go as well because people will be freaked out in the market, concerned. But as of right now, our bond position was reduced to 10%. So it used to be 15%. It's been reduced to 10%. Again, if I look at this 5-year chart, you can see why. Bonds have just been going down, 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 right? It's been a slight turnaround here at this bottom, but like it's still struggling. Fucking hate bonds. But anyway, we'll see what happens. Monday is going to be interesting, or next week's going to be interesting, unless these tariffs completely back off. We'll see. And of course, Bitcoin, going back to 2024, beginning of last year, we had our big pump when we got the spot Bitcoin ETF. So there's this big pump that happened in about March, and then it came down for about 6-7 months. And this descending consolidation pattern. And then it broke out about a month before the election, that popped, and then we kind of hit Bitcoin around this 100K number, which is always kind of funny because people love big round numbers. But it's been kind of just popping up and down, hasn't been doing too much. You know, I look at it on this long-term trend going back to about like 2017. You kind of see it kind of hit these points, you know, where we had the 2017 high, we had 2 peaks in 2021, then we had this peak in 2024, and right now in 2025. So I don't know if this line means anything at all, but it's very interesting how well it syncs up in this trend. So we're going to see what happens. Maybe with tariffs coming in, that's another thing that will take a hit, is Bitcoin. We'll see. At the very least, the IBIT, which the correlation has been good, and I can see here, you know, we're kind of peaking right here. We have this double kind of top pattern happening right here. So we'll keep watching what happens. At the very least, the big change this week was increasing commodities by 5%, from going from 15% to 20%, and decreasing government bond positions by 5%. So it went from 15% to 10%. And it's very funny because on Monday, there was a hard reversal on bonds. Where's it at? It's 25th. Yeah, right here. Look at this. Look at this reversal on bonds. Oh no, right here. Sorry. There we go. There's like this turn on bonds. Oh, here we go. Large spike. Why am I so blind right now? So this basically came into the weekend. So here at the bottom, you can see January 24th to January 27th says over the weekend. So I made my change on Monday morning. And there's like a sell-off in the market, and then bonds popped. Of course the day that I reduce my position in bonds is the day bonds spike up like this. Of course I always choose the best days to do that. Right? That's just how it goes, though, for me. By the way, like I said, I think long-term commodities are still going to be in a bull trend, at the very least, until inflation goes away or dies down. It won't go away, obviously, but it dies down, goes into a descending pattern rather than an ascending one. But we'll see where it goes from here. That is our weekly update. Every week we're going to do the update, so you can actually follow somebody managing a portfolio rather than just people talking about portfolio stuff and what they would do, but don't actually show you any numbers or anything like that. So at least you can watch it. Whether you think it's good, bad, doesn't matter. At least you get to fucking see it. So as always, thank you for watching. If you have any questions, comments, or criticisms, let me know, and have a good day.